You got it on? This is the New York Fire Department Pension Fund Investment Meeting. Today is 1/14/2015. It is now 25 after 3. We're at the New York City Comptroller's Office, 1 Center Street, room 530, New York, New York. Could we have a roll call, trustees?
Mr. Justin Holtz.
Here.
Mr. David Jeter.
Here.
Mr. Antonio Rodriguez.
Here. Your name was just called. Here?
Here.
Here.
Mr. Steve Casti.
James Levin is Cassie's proxy.
And Mr. James Seven.
Here.
Mr. Eddie Brown.
John Kelly has Eddie Brown's proxy.
And Mr. John Kelly.
Present.
Mr. James McGowan.
Here.
Mr. John Farina.
Here.
Mr. Paul Thorough.
Here.
Mr. Thomas Phelan. Commissioner Douglas White.
Here.
I have 23 votes and a half and a quorum. We may start the meeting.
So the first item on the agenda really is the November monthly performance review.
Okay. We're going to work from the flip chart book. I'll just point out that this was an up month. We've been enjoying up and down months since the second half of the year. November was no exception. Up 115 basis points for the portfolio versus 139 for the benchmark. It's been a increasingly volatile market as we've gone through the back half of the year. We're now, and this is a little past the period that's under review here, gone through a radical change in energy pricing with the collapse of oil prices, which has multiple impacts on the economy. Some of them will be a long-term restraint on the economy, on the oil patch in terms of capital spending, but on the positive side, it's a huge tax cut for consumers, particularly consumers of modest income. So our managers are busy adjusting to these changes and hopefully able to navigate the increasingly choppy waters. We're staying pretty close to the range in terms of our asset allocation. If you can look on page 32, you see the adjusted policy weights. We have been working on the left side, which is the equity side, for most of the second half of the year. When I came in early July, the green bar, the domestic equity, was up towards the top end of the range. We've been pulling that back towards zero, and you can see that we're almost at zero with the 0.5 overweight in domestic equity, 0.6 overweight in domestic developing markets, and emerging markets sort of right on the money in terms of the long-term weight. We do remain underweight in core plus or longer-term bonds in dark blue, in inflation-linked bonds in purple, and overweight in cash, most of it in 2-year bonds, which count as cash in our asset allocation. I'll note that we're over the maximum amount as we took a snapshot at the end of November, but that was due to 2 things. One, the skim, which is now flown through to the VSF, and benefits payment. There are some large movements at the end of the period of time that are now over, and we're now well within that band down in the 4% range. So the asset allocation looks much like we've been discussing over the past couple of months. You can just now really see it in the November numbers. Why don't I turn it over to Martin to give you a little bit more detail on November and look through some of these charts in detail on spreads and the currencies and so forth.
So thanks, Scott. If you turn to page 18, I'm going to give you some details on what Scott just mentioned about volatility in the market. Page 18 is a chart of the VIX, which is commonly known as the volatility index. It's on the S&P 500, but it gives you a really good snapshot as to what volatility is going on in the market. And if you look at the very right side of the chart, you see that volatility towards the end of December really spiked at a couple of points. Now, partially it was on low volatility, but nevertheless, volatility tripled. The second, sort of in the middle towards the right, the second part was in October. You remember the beginning of October was extremely volatile. We went through that last month, that tripled, but it also nearly happened towards the end of December. The last week of December was extremely volatile online trading, but nonetheless, it was an indication that there was the market was looking at the new regime, meaning going from QE3 to an expected regime of raising rates. If you take a look at page 20, talking about rates, the 10-year Treasury, we show here was at 217. This is remarkable how quick this moves. This was done, as you see on the top left, at the very end of the year. It was 217. We're now well below 2%. I sound like a broken record on the way up. It keeps going down. But what happens is when rates do go down, ultimately, because the expectation is that rates will go up, what's happening is when rates go down is we're stealing returns from the future in the context of duration. So duration says that when rates go down, prices go up, but when rates eventually go up, prices go down. So by rates going down further, it just will make the ultimate pain more painful when rates eventually go up, which explains the underweight that Scott mentioned before to long-term bonds, which have the most duration. On page 21, we really don't go through this chart, but I think it's very instructive. The red shows high yield spreads versus treasuries. What this means is, what is the yield on average for high yield over treasuries? And as you see, there's definitely been a blip up. Part of it is due to the price of energy, which we do not have included in here, but we're including in next month's. Basically has been cut in half in an extraordinarily short period of time, to the point that we're at 5.5-year lows, and each day is a new low. You read in the paper that we're over 100 days of consecutive days of gasoline prices going down. The average price of a gallon of gas is now barely $2.10, which is remarkable when you think about it. Some of the newest issues in the high yield market over the last couple of years were funding some of the more speculative E&P energy exploration and production energy sites for fracking and for other things. And with the price of oil now in the 40s, it makes it non-economical. And so the high yield market has recognized that, and spreads have gone up. While that's a bad thing because spreads going up means prices go down, is also an opportunity because managers can distinguish between what will be a going concern going forward and what will not. So it actually is an opportunity, as I'll show you going forward. Page 25 is an interesting pictorial because it pretty much goes, well, it leads into the end date is January 5th. You really see in white, which is the Russell 2000 U.S. equities, and the yellow and orange, which is non-U.S. equities, the divergence in returns. So our overweight, which we have taken down to U.S. equities, really helped because of this divergence, where the EAFE markets had not kept up, partially because they're in recession, partially because the currency, even if we managed to pick good companies, but the currency, as I'll show in the chart prior, the currency has fallen off to 9-year lows. So last chart I want to, in this area I want you to turn to is on page 16. And the time we printed this was at the end of the year, and you see that the price of €1 was $1.20, and it's lower since, and this is now a 9-year low. This makes sense from a technical and fundamental point of view because if the Eurozone is either in recession or very, very slow growth, and the U.S. is growing and expecting to raise rates, an investor logically would want to get the higher rates and a stronger economy and a more stable economy. And so that's finally happened. You can argue why didn't this happen 2 years ago, because nothing really changed, but the market, for whatever reason, kept the euro in the 130s range for several years, and finally it's broken that range. And that has helped the dollar, and it has helped the dollar versus the euro the yen, we could show you a chart of the yen. It's also an amazing chart to show that it's broken through a decade or more. Doug, I don't know what the high is. Last time it was at this level, but it was a long, long time ago. And that's part of the Japanese financial authorities, equivalent of the Fed's plan to revive the economy, because Japan is an export-driven economy, and so if they devalue their currency, it actually helps their exporters because things become cheaper for us. So that's part of their plan. So how did November look? If you turn to, it's hard to read this, but it's the page right, it's in the middle, it's the page right after the economic charts. November was a good month. You'll see all the way on the left, Russell 3000 was up nearly 2.5%. You're hard pressed to find a negative number here. Emerging markets did go down about 1%, and high yield went down. I mentioned that's primarily due to the energy sector continued in December, and in fact, if you turn the page, you'll see how December went. While we don't have December numbers here, this is a hint of what you're going to see next month. And it's mostly negative numbers on the equity space, certainly in non-US equity, but also in high yield, in tips, in convertibles. So we're probably down a certain amount, 0.5%, 0.75% in December because of that. We'll know the exact number in a couple of days when we get the numbers from the bank. So if we turn to the page 31, the numbers from November all the way on the left were good. It was a good month. It was up 115, which brought the fiscal year-to-date returns to 164. Scott went through page 32. So if you have any questions, I'd be happy to answer that. Or Scott would be happy to answer that, I'm sure. We have more details on that on page 34. And I think the last thing I want to show you, which I think you'll be pleased to see, is on page 37 and 38. So page 37 shows the last year's worth of market values month by month. And we told you this last month we weren't sure which side it would come out on, but it turns out it did come out on the side of a new record high. As of November 30th, the Fire Pension Fund was at 10.932, which is an all-time record high, just short of 11 billion. And the next page after that on the bottom shows you that the 10-year return through November was 7.21, and the actuary was here to tell you that that's exactly what we were hoping for. The rest of the book shows individual programs, managers, and if you have any questions about those, we'd be happy to address them.
Any questions? Just want to note that Tom Fairlawn is presently in the meeting. Any questions?
That's all I have.
Okay.
Okay, we move on to the next piece, which is trustee education. Starting September. Just reporting back to you guys. We came around a couple months ago and we're floating the concept of having trustee education sessions, sort of joint trustee education sessions for the 5 systems, and polled you guys to see what topics were of interest to hold such education sessions about. You can see the votes on the second page, and quite frankly, there are a couple of topics that everybody wanted to talk about, and those are the ones that we're going to start with. Fiduciary training, governance, sort of a new trustee primer was something that was asked for. There are several new trustees here. There are a lot of new trustees at NYSERS. And so when we talk about general fiduciary issues and governance, we're going to try to have a sort of primer for new trustees as well, and a refresher for trustees that have been on the job for a long time.
Scott?
Yes, ma'am.
I just wanted to mention that it's my understanding that the law department will be working with the controller's office on the fiduciary training. I think Keith has already been in touch with Lee, and that's basically it.
Yeah, so there was a concern expressed at some of the other meetings that when we do these things, that rather than having staff of any one of us do the presentations, that we would get somebody from the outside to do it. So the legal departments are working together with each other, And we've promised the other systems that when we do the fiduciary training, we'll get an outside expert to come in and do it. I think they're pretty standard things, but I think it's good policy to have the perspective of a third party on these things. So we're going to start with fiduciary duty. We'll get a calendar together, and we just wanted to kind of report back and make sure that you guys are comfortable with the priorities and agenda that are laid out here. We'll just kind of work our way through the list. If people get tired of these sessions, we'll stop them. If other priorities rear their heads, we'll adjust.
Any questions?
Well, like you just said, I've been working with a third-party training company recommended by the law department. That company is planning to provide fiduciary duty training to another city fund. That's why I was introduced to that company to talk about fiduciary training for this board. She's going to call me on Friday, and when I get all the information together, I will also send it to the comptroller's office. I don't want it to be something duplicate, that you're talking to them, I'm talking to them as well, so I just want to work together on this.
Yeah, terrific. We'd appreciate that. And we just went through doing fiduciary training for all employees in BAM, and we did that internally to save money, but we'll definitely talk to you about that. And I know that NYSERS has someone that they've been working with.
It is the same one with NYSERS, and
Okay.
the law department suggested if the city's other boards also go
Right.
for training with them, they can negotiate on the
Yeah.
price.
Yeah, I think that makes a lot of sense. Yes.
When are you looking to slot? Like approximately?
As soon as we can get a date together that makes sense with everybody. Susanna's going to work on this, and she'll be back on dates and so forth, and we're lining up a vendor. But yeah, I would say no sooner than sometime in February, but probably March or April. Yeah.
And another idea, if you're all going to retain the same outside firm, there is also a possibility of having one session, if that's...
Well, and that's what we're working
Yeah.
towards, is to have a single session. There are some boards that are really gung-ho on this and want to have training at every meeting. And so we're asking their consultant to help us provide primers on some of these topics. But what we're talking about here is it would be a joint meeting with all the systems. We hope not to be duplicative, as you stated. So we will be back here on that. Just wanted to give you a glimpse of where we are. With that, Mr. Chairman, we are done with our comments for the public session.
There's one thing I just want to mention in the public session. Apparently, the State Financial Services is doing an audit of the pension fund, and they have requested that all trustees provide them with resumes. I'm not sure why, but that's what they said.
They actually requested resumes from people who sat on the trustees from 2009 to 2013. So a lot of people, they're retired. I'm unable to get
So
hold
good
of
luck
them. I
getting
can only get whatever I can.
Okay, so the thing is that the present members should be submitting resumes, right? So anyone else, they don't say how complete these resumes should be, so, you can make that decision.
Who's asking for this one?
The
It's
state auditors.
State auditors. We have state auditors who are at the fire department right now going through all kinds of the finances, whether certain protocols were followed, stuff like that.
They apparently are, they're working through the systems, and you're not first. And these requests are the same as the requests that other funds have received already. Yeah,
Started in NYSERS and teachers is doing it.
right.
Yeah, and police is also doing it. I know the mayor's office, people provided the resumes because they sit on the NYSERS and other funds. So I would also need you guys provide me a copy as well for our fund to our auditors.
It might be easier to do it that way. Obviously, they have them, but, these are, they're very gung-ho organization with respect to certain requests. Okay? All right, so if we finish that, now we need now need a motion to move out of the public session, move into executive session.
So moved.
Is there a second?
Second.
Any objections? Hearing none, motion carries. So we're off